In this video, I'm going to talk about the impact of transactions on the basic accounting equation. What is the basic accounting equation? Assets equals equity plus liabilities. Do transactions affect on the basic accounting equation? Yes, of course. Each transaction has an impact on the accounting elements of the basic accounting equation. So what are the elements of basic accounting equation? Assets, equity, and liabilities. Normally, one transaction has two impacts on the basic accounting equation. There can be an impact to assets and equity, maybe an impact on assets and liabilities, or sometimes two impacts on assets. Now I'm going to use 20 transactions and show you how transactions impact on the basic accounting equation. Okay, then let's take the first transaction. Invest in capital rupees 200,000. Now this means the owner of the business invested his personal money, rupees 200,000, to the business as capital. Now I have taken these transactions with regard to a sole proprietorship. So what happens when owner invests capital in cash? Definitely assets will increase because 200,000 of cash will be invested to the business. So assets increase. To show the increase, we have to put a plus mark. Assets increase by rupees 200,000. All these amounts are in terms of rupees. So as I told you, assets increase by rupees 200,000. Now, which asset increase? It's cash. Because of cash, the total assets in the business increase by rupees 200,000. Now, this is the impact one. As I told you in the beginning, probably we have two impacts. So what is the second impact? Now this cash amount belongs to the owner of the business. This means the assets belong to the owner will increase because of this transaction. So what do we call the assets belong to the owner of the business? We call it equity. Therefore, equity increased by again rupees 200,000. And this is we call capital. Therefore, due to capital, equity of the business increased by rupees 200,000. What happened to liabilities? There is no change for liabilities. Now check here. When we write the impact to the basic accounting equation, we can check whether our accounting equation balances or not. Does it balance? Yes. From this equal mark, this side is left side and this side is right side. So check the figures. On the left side, we got 200,000. Also on the right side, we have 200,000. So our accounting equation balances. Even if additional capital is invested, same impact will be happened. Assets increase as well as equity increase. Now this is our first transaction. Now I'm moving to the second transaction. It says invest in owner's private motor vehicle to the business rupees 200,000. Now we know that capital is the owner's private cash or maybe owner's private property invested to the business. So this can be in terms of cash or in terms of a property like motor vehicle, maybe a land, maybe a machine, any property. So here the owner's private motor vehicle. So what happens to assets? Motor vehicle is an asset. So motor vehicles, the value of motor vehicles in the business will increase by 200,000. So once again, assets increase by 200,000. And what is this particular asset item? It's motor vehicle. Let's say motor vehicles. So assets increase by 200,000 due to motor vehicles. What is the other impact? Here again, this is about capital. This means this motor vehicle belongs to the owner of the business. That means this motor vehicle represents equity of the business. Because of this motor vehicle, the value of assets belong to the owner in the business increases. In other words, equity increase. Therefore, we can say that equity increased by rupees 200,000 because of capital again. So both are capital items, cash, even motor vehicle, because they are owner's private cash and private motor vehicle. Again, no impact to liabilities. Does our accounting equation balance? Yes. On the left side, we have plus 200,000. Even on the right side, we have plus 200,000. Now let's move into the third transaction. Cash purchases. What do you mean by cash purchases? Here, purchases means the business purchases stock of goods. The stock is the items which are sold to the customers of the business. This is the stock which is purchased for the purpose of reselling. For example, if it is a bookshop, it will be stationery stock. If it is a furniture shop, it will be stock of furniture. If it is a clothing shop, it will be stock of clothes or stock of garments. So what happens? Here the business purchases stock of goods for rupees 50,000 in cash. Now this one is a shortened form of the transaction. Here I have elaborated this transaction, the long form of this transaction. So cash purchases means business purchases stock in cash. So what happens? What are the two impacts? Definitely, cash of the business will reduce. Now, this is a cash transaction. Definitely, there is a change of cash. So what happens to cash? Cash will definitely decrease. This means assets in the business will decrease. So assets decrease by 50,000 because of cash. What is the other impact? Now, the business spends cash and in return, The business purchases stock. What is stock? What is the accounting element of stock? It's assets, isn't it? So stock of the business increased by rupees 50,000. Stock increase, cash decrease. So notice here, both impacts occur on assets. One particular asset increases, the other asset decreases. This is another possible situation when we consider impact of transactions. Now let's move into the next one. Now what about credit purchases? There should be S here. Credit purchases. What do you mean by credit purchases? Cash purchases, purchasing stock in cash. Then credit purchases means purchasing stock of goods on credit. So what are the two impacts? Definitely you know that stock will increase in the business. Assets increase by 50,000 in this business. What else? When a business purchases on credit basis, the liabilities of the business will increase. So we can say that liabilities increase by 50,000. And we call that liability as creditors. Okay, let's move into the fifth transaction. Here it says payment to a creditor. Who are creditors? Actually, business owes to creditors. Now what happens in this case, the business make a payment to a creditor. Now creditors are liabilities. So what happens to liabilities? Definitely liabilities of the business, right? These are liabilities. Liabilities of the business will decrease by rupees 50,000. And what do you call this liability? It's creditors. What else will happen? This is a payment in cash. So when we do a payment in cash, cash of the business will decrease. Therefore, assets decrease. Assets decrease by rupees 50,000 and this asset is cash. For us to show the detailed impact, we need to write the particular item, the value, and also the plus or the minus to indicate the increase or the decrease in value. Now let's do the sixth transaction. Now again, I'm going to write the accounting equation. Assets in rupees equals equity plus liabilities. Now what is our transaction? Purchase of a non-current asset for rupees 70,000. Now what are non-current assets? The very famous non-current assets are land and building. Then motor vehicles. Then machinery or machines. Also furniture. And also you can say equipment. So if the business purchases any of these non-current assets, what will happen to the basic accounting equation? Is there an impact on assets? Of course, because the business purchased a non-current asset here. Now let's take purchase of a machine for rupees 70,000 as an example. Now, if the business purchases a machine, the total assets of the business will increase by rupees 70,000. So what is this asset item? It's machinery. What else will happen? Now, this is a cash transaction. The business spends rupees 70,000 to purchase this machine. So once again, the assets of the business will decrease by 70,000. So what is this asset item? It's cash. There is no change to equity or even liabilities. Only assets change. One of the assets increases, and on the other hand, another asset decreases. Then what happens if the business purchases a machine on credit? Once again, assets increase by 70,000 because of the asset called machinery. On the other hand, liabilities will increase by rupees 70,000 and we call it creditors. Okay, then let's do the 8th transaction. Again, I'm going to write the accounting equation. Assets in rupees equals equity in rupees plus liabilities in rupees. Right, what happens here? Cash sales. What do you mean by cash sales? It's sale of stock by the business. So selling stock of goods for rupees 80,000 in cash. This is a cash sale. So the business sells stock and in return, the business receives cash. So what happens? Since the business receives cash, assets of the business increase by rupees 80,000. What is this asset? It's cash. On the other hand, the business sells the stock. So what happens to stock? The stock will decrease by rupees 80,000. So here again, both impacts occur on assets. One of the assets increases, another asset decreases. Right, 9 transaction. We know how to show the impact of cash sales. What about a credit sale? If the business sells stock on credit, here again, the stock of the business will reduce by rupees 80,000. So what is the other impact? So when a business sells stock on credit basis, business's customer will become a credit customer. This means the customer owes to the business. So we call them debtors. The customers who owe to the business. So what happens to debtors? When business sells on credit, the debtors will increase. Remember, debtors to a business is an asset. So once again, assets in the business will increase by rupees 80,000 and this asset we call debtors. Or in other words, you can say debtors increase by rupees 80,000. Right, the 10th transaction. Receipt from a debtor rupees 80,000. We know that debtors owe to the business. When you're considering impact to the accounting equation, always think from the business side. So for the business, what happens? The business receives cash from a debtor. So what happens to the asset of the business? Definitely assets of the business will increase by rupees 80,000. And what is this asset? It's cash. And on the other hand, the asset called debtors. Debtors will decrease by 80,000 because they pay to the business and settle their due amounts. So once again, both impacts occur on assets. Now I have discussed impact of 10 transactions on the basic accounting equation. I hope you can simply understand how transactions affect on basic accounting equation. Watch the third part of this video series to identify impact of 10 more transactions. See you then. Don't forget to subscribe.